We say culture is important, culture matters. Well, how?
We're powered by our brains. We're not always rational. We are influenced by others.
I think I'd start with looking at what's called the better than average effect.
So one of the things we look for picking flight directors is what we call command presence, right? You kind of just look at people like, you better get it together. We got stuff to do, right?
Good practice would be for a leader to say, well, this is a mistake I made recently, and this is what I did about it.
I can't emphasize enough the disempowerment of the lonely decision maker.
So the opposite of what we think of as an ethical decision frame, we can think of as a game frame.
It doesn't make you unethical to wrestle with this. The smart money is we help you to try to figure this out.
This is Banknotes, Banking Culture Reform. The views expressed in this podcast do not represent those of the New York Fed or the Federal Reserve System.
Hi, and welcome to the Banking Culture Reform podcast, part of the New York Fed's initiative to drive awareness and change in financial services culture. This series, Norms, Mindsets, and Decision-Making, explores questions like, why do ethical people do unethical things? How can organizations encourage staff to speak up and executives to listen up? And what role does context play in shaping people's behavior? My name is Tony DiCario, and I'm a member of the New York Fed's culture team. Today's conversation is with David Grosse. David's responsible for conduct risk, culture, and behavior at HSBC Global Banking and Markets. A longtime banker, David became convinced that understanding human behavior was the only way to really understand what was happening at a bank. So much so, in fact, that after a 20-year career in operations, audit, and operational risk, David went back to school to earn an MSc in behavioral science. In this episode, David will tell us about his own experiences with context and group behaviors, including at rugby and soccer matches. Welcome, David.
Thank you very much, Tony.
So, David, I want to start off by asking you how you landed in this spot where you did. You've had an interesting journey to get there. What motivated you to work on culture?
I've been working in banking for quite a long time now, over 25 years. And I'd say that my background was kind of the more traditional route in sort of risk and control, coming through, internal audit roles, head of operational risk roles, traditional roles. And I think I got a sense as time went on that maybe I was missing something. Maybe there was a sort of sense of frustration there. Or maybe I shouldn't say frustration, maybe I should say curiosity. It felt to me that we were expending a lot of energy in traditional areas, but not necessarily getting the outcomes we were expecting. I think particularly I look at my life in operational risk. I got into operational risk at the time it was the thing to get into around the turn of the millennium with things like Basel II and trying to make it much more of a sort of a scientific discipline, if you like. And I thought it was very interesting that ever since then, through the millennia, it's been bizarre that a lot of the issues we've had in banking have been in exactly that area. We don't seem to have tackled the root causes at all around such as conduct. We've had hundreds of millions, in fact hundreds of billions worth of costs and fines in this space at the very time we thought we were focusing, through operational risk on the areas which would help reduce the risk. It doesn't seem to reduce the risk, it almost seems to have increased the risk. So I was frustrated but curious and really wanted to try and understand why. I've increasingly got into looking at the drivers of human behaviour because we work in banks. Banks are full of tens of thousands, or in the case of my institution, hundreds of thousands of people. And that's what really drives what's going on. That is what we are. And so without understanding human behaviour, to me, it felt like we were never going to really properly tackle risk within banks.
So how did you convince HSBC that this was something that they should let you do?
Really it was just introducing it through the work we were already doing. So we were already doing a lot of work around the broader conduct agenda, about trying to improve what we're doing around the conduct agenda. And in doing that, we sort of took it apart and said, well, if we don't tackle not just the hardware, not just the middleware, the areas where things might go wrong, conflicts of interest, etc., but actually the underlying human behavioural point, we were never going to crack this. And like many banks, we had a fair bit of scrutiny from some very important regulators, so we needed to focus on it. And so, there was definitely an appetite to look at this in a more scientific and behaviourally scientific sort of approach. And I think a key part of it is not making what we do and how we think about behaviour and behavioural science just about the bad stuff, if I can put it that way, just about looking at the downside of cultures that aren't working. You know, there are many, many areas of applicability in how we look at our own staff, how we look at our behaviour with our customers, and indeed, if you look at things like trader behaviour, asset manager behaviour, you know, there are lots of very interesting areas of exploration which are good for the P&L, but equally good for the internal culture of the organisation. So I think focusing on the broader benefits you can get from behavioural science is absolutely key, and not just pocketing it into one specific area of looking at the downside of people's behaviour when they misbehave.
I am going to focus for a minute, though, on the bad stuff. One of the kind of central questions we're trying to explore through this series is, why do otherwise ethical people do unethical things? And I wonder if you have some perspective on that after a few years being at this.
That is such a great question. Many books have been written on the topic. I think I'd start with looking at what's called the better than average effect, insofar as, you know, many people are aware that people think they're a better driver than average. Everybody thinks they're a better driver than average. I'm not great at statistics, but that seems unlikely. When it comes to your own concept of your own ethicality, it's even more extreme. People think they're better than the average around conduct and ethics, etc. I mean, there was an interesting piece of research in the UK which actually looked at prison populations and asked them questions about their view of their relative ethicality versus the wider society. And again, it came out that they believed they were more ethical than the wider society. And, you know, in their heads, they had all sorts of situational reasons which led them to do the unfortunate things. I actually did a little bit of research when I was doing my master's in behavioural science, looking at the better than average effect. And I'd set out all sorts of different ethical scenarios which I was getting people to rank themselves against as to how they thought they'd behave in certain situations, on a sort of scale of you know, they would always exploit the situation or they'd never exploit it. And I deliberately, after I did that, also asked a question at the end about, well, how do you think all the other people in the survey would have responded when compared to you? The reason I did that is because if you ever want to do any research and you want a cast iron way of getting a result, is look at the better than average effect. You know, off the back of that, I think it was something like they felt that 58% of people would exploit situations more than them. That about 36% would exploit the situations about the same, you know, that's about the same as me, and only 6% would exploit the situations less. So you can very much see how people position themselves as being at the better end of things ethically. Now, if you think about that, that means that people basically think that a lot of what they do is ethical. It is in effect, you are kind of blind to some of your own behaviours because you have rationalised them internally. So I think that is a really important thing to consider as to why people do unethical things. And then you can actually come up with other examples. And so I'd use an example where when I used to commute into London before the COVID days, I would drive into a car park and I'd have to tap into my phone the fact I'd got to that car park to pay the car park fee. And then I'd drive up into London, I'd go to work, and then as I was coming back out again on the train, I'd suddenly have this thought of, oh no, I don't think I paid, you know, my car parking fee. I'd get back to my car in the car park and I'd celebrate because I didn't have a penalty notice on my car. I'd climb into my car, I'd drive home, and that would be it. Is that in any way ethical because I haven't paid the car parking fee? And when I gave that example to people, all sorts of people very kindly gave me all the reasons why it was perfectly acceptable for me to do what I'd done, which was very kind of them. But what it shows is that in your daily life, you can have all these situations where you rationalise things which ultimately perhaps aren't ethical because you understand the context of it yourself. And so, you know, beyond that, I think there are lots of other things that tip people towards perhaps potentially behaving in less ethical ways. There'd be things that, you know, around being tired and emotional. There'd be the sense that things aren't fair. The slippery slope is often quoted, where a very small transgression, gradually builds and builds and you can't back your way out of it. And things like loyalty to others is really important, because ultimately many decisions, you're in a conflict situation. What's best for me? What's best for my team? What's best for my family? What's best for the bank? What's best for wider society? Sometimes those things can be in conflict with each other. And then how do you balance those things? And that kind of loyalty thing often comes into play. And maybe one other thing I'd say that sometimes allows people to rationalise the behaviour is they go, well, everyone else is, so I'm going to as well. If I don't do that, then I'm the outlier. So, and probably one of the key things is the context and situation in which they make decisions is really, really key. And it's not just about their own personality in isolation.
I think that the concept of kind of ethical blind spots, of maybe not recognizing the lack of ethicality in a decision that you've made, is a really central one. Do you have thoughts about how to help people recognize situations, decisions as ethical ones, how to help people kind of frame a decision as an ethical decision?
So the question being, how do you help people recognize potential ethical blind spots in their own behaviour or their own situations? And I think that is actually a really key point when we're looking at conduct and culture in the financial services industry, for the reason being there are very many situations, scenarios, grey areas, conflicts in financial services over and above other professions. And I think that's why we have many issues in banking, is because we've got a plethora of opportunity and a plethora of grey areas. And I think getting people to understand the behavioural drivers and the situations and scenarios where they may be treading into dangerous areas is really the key of tackling these things. And I think a very important thing to do is look at things like conflicts of interest and really have a detailed way of understanding in a particular role, in a particular product, in a particular location, where you might be exposed to those conflicts of interest, and really try and think about it as broadly as you can. Because it's from those situations, it's from where you are conflicted, that you will start to nudge the interests of one party over and above the interests of another party. And obviously there are some more basic ways that you can do it when faced with a decision, is to do what people often say is sort of look at how you think you'd explain that to somebody outside of the bank. How would you explain that to a journalist who asks you that question? How would you explain that to a regulator who'd ask that question? And probably more importantly, how would you explain that to your family, to your friends, to your parents? But it is absolutely key, I think, to sort of conduct and culture within financial services in understanding the full population of the grey areas that you might be faced on a day-to-day basis.
Yeah, it's such an interesting area. We had a conversation with an academic at Carnegie Mellon, a woman named Taya Cohen, and she studies guilt proneness and the linkages between someone's guilt proneness, using similar questions and scenarios to what you described. So it's how do you kind of raise that guilt? The guilt. It was an interesting conversation to have. And you've touched on some of the same topics that she did.
Tony, you raised the question there of guilt proneness, and how do you, in essence, get people to feel that, because that then helps moderate their behaviour thereafter. I mean, that's actually something I did look at in my work around my master's in behavioural science, and I was particularly looking at the potential use of oaths in financial services. So very similar to what's used in a medical setting with Hippocratic oaths, can you use oaths in a banking setting to see whether that can impact behaviour? People may be aware that that's actually used in the Netherlands as a mandatory thing. It's used in Australia as an optional oath for bankers. And I was doing a bit of research to try and understand, does it actually make a difference? And that kind of plays into this guilt proneness thing. And really what you're looking at there is something called cognitive dissonance, to see if you can get people to sort of think about the sort of person they are. And if people have two thoughts about the sort of person they are and the activities they undertake, and they're in dissonance with each other, if they clash with each other, that makes them feel really uncomfortable. And they want to bring those two things in alignment with each other. So they may well adjust their behaviour if it doesn't come in line with the sort of person they think they are. And potentially doing things like an oath can set that up. It would have to be done in quite a thoughtful way. But if you set something up where you give people a lot of sense of personal choice about what they're committing to or how they're promising something, so they feel like they themselves are vested in it. If you then wrap around that quite a lot of ceremony about how you are publicly explaining to peers and to other people in your institution, and potentially to the wider society and family, the sort of person you are. So if you kind of make it a personal thing, a thing with choice, a thing that resonates to somebody, then actually there is evidence that has impact on subsequent decision-making, because obviously it will then set up that kind of guilt proneness. It will make you feel awkward. It will actually give you some sort of physical signs that you're feeling that you're in discomfort. And then you might dial back on the sorts of decisions or unethical decisions that you might otherwise make.
The question of an oath brings me to another question, which is, if there were an oath to be instituted, it would likely be some sort of industry-wide initiative, right? It would be unlikely that it would be one firm that would have bankers take an oath. And in some ways, the culture issue is something of a collective action problem, because bankers move around. People move from institution to institution. Sometimes whole teams move. And so what is one organization's either problem or success can quickly become another organization's problem or success. Do you have thoughts on a sector-wide approach that could be deployed beyond an oath?
And I think the first thing I'd say is, I think of all the things that we kind of look at around banking culture, risk-taking, etc., I think this is an area which absolutely requires collective action, which absolutely requires institutions to share openly with each other. Because as I say, all boats float on a rising tide. So I think that what I wholeheartedly encourage people to do is to reach out to all the other institutions that you see out there that have behavioural science capabilities, that have thoughtful cultural capabilities, and discuss with them what you're doing. I don't think there's any sort of secret sauce in this where people should be holding onto their own cards as if it's some sort of magic sort of P&L advantage over other institutions. So I would definitely encourage people to speak to what I call the coalition of the willing, of banks and bankers who are already engaged, on this journey. I'm not going to name them in this podcast for fear of embarrassing them all, but I think they're relatively well known. So I'd certainly encourage pan-banking engagement with institutions who are on this journey already. I would definitely encourage joint work with academia. It seems to me that academia has done so much work in this space, which is of use to wider corporate life and to wider banking life, and they sometimes struggle with the applicability into day-to-day, corporate situations. And on the other side, we're in the banking world, and we struggle with actually getting the kind of scientific underpinnings of what it is we want to do. I just think it's so important in this particular area that we have joint work, with academia, that we have industry-wide relationships, that we have bilateral relationships to try and improve what we're doing, and to do joint research projects, and then everybody wins. And I think equally, there are some key regulators who are much more advanced in this area. I don't want to just deliberately be very nice to the New York Fed on this call, but definitely the New York Fed, the UK FCA, and others have some very good resources that are easy to find, that takes people on the journey.
Thanks. So I'm going to shift gears a little bit and look at decision-making again. What, in your opinion and in your studies, do you find makes someone either willing or unwilling to raise concerns to decision makers?
I think the first thing I'd say is, when we look at Speak Up, I always want to try and reframe it towards the listen up side, because we're great, I think, as an institution saying it's about Speak Up, which puts the onus on the individual, which makes the individual feel, okay, it's something about me. It's something about me needing to be brave to raise a topic. And actually, we should invert it as much as we can into the listen up construct, into how do we ensure the environment that has the institution and management listening rather than it's about the people, why aren't you speaking up? So I think that's a key inversion I'd like to put in. And the other thing I'd say is it's also very, very important to look at it in the context of day-to-day conversations and the safety that people feel in meeting situations and in bilateral conversations. How do we get people comfortable in those environments? I think too often we frame it as if it's the egregious end of the situation where something really bad's happened and somebody has to flag that and, a whistleblowing case goes in, etc. And I think that's to mischaracterize it. I think the most important thing we need to do is to ensure we're looking at the day-to-day decision-making environment, because it's within that gradually issues will come to the surface. And if we get that right, it's very unlikely we'll need to spend too much time, looking at the more extreme end of speak up and listen up.
What hinders listening up, and what can be done to improve it?
The key thing I'd say is that it's not necessarily deliberate. I think there's this sort of sense that people feel that maybe there is fear that is percolated through organisation, and that quashes people's comfort in talking up. But I think a key part of it is actually sort of people not necessarily understanding fully the power dynamics. So it may not be deliberate, but if you don't give people the sense of psychological safety, the sense of easily being able to discuss topics, then they will feel that they can't, even though you haven't deliberately put fear into them, if you like. So, understanding the power dynamics is really, really key, and giving people the permission to talk in an open environment is important.
The BSB has written and spoken extensively on the kind of fear versus futility roots in speaking up. How do you think about the futility angle of that? And, how do you advise management at HSBC to combat any potential for your staff to feel a sense of futility in speaking up?
I think there are a number of elements to it. The one is the if people have raised points before and no action has come off the back of it, then it comes into the why should I bother point. That's one element to it. And I think the other point is if in how people raise concerns or how they escalate issues, it is felt that the onus of responsibility or the hard work falls on the person who's raised it, that's definitely also going to impact how people want to engage in it. Because if they feel that it's a time absorber for them, if they feel that in raising an issue, it puts a lot of onus on them to do a lot of hard work, then that's going to knock their sense of wanting to get engaged. So, I think it's both, have I raised something before and how's it been actioned, but also how much hard work is this going to infer upon myself. And so, obviously it's so important that people feel points are actively listened to and actioned, and you need to give very quick and engaged and transparent feedback to people, even if in effect it's bad news. I think what people sometimes forget is that if there's no specific good news that you can hand to somebody about how a decision's been made, how their life may be made easier, how something's been escalated, you still need to communicate with them what you've done, how you've done it, how they've been listened to, because otherwise they feel it's just gone into a void and that, no action's being taken.
So I want to move on a little bit to kind of the question we think can be framed somewhat as a debate between personal motivations and culture or context and norms. And I want to ask you how you describe how you think about the relative weight of personal motivations versus culture in shaping people's behavior and shaping decision making.
I think the first thing I'd say is it's hard to ascribe an exact weight. There's a huge amount of work and research that's gone into this. But I think the most important thing I'd say is that the impact of situation, context, and environment is often underplayed and is far more important than is often given credit for. And it's the rebalancing we need to bring in, is to bring in the situational part. Psychologists, call this, the fundamental attribution error, is that, when we look at the behavior of others, we always tend to ascribe a personal behavioral trait reason for it. And when we look at our own behaviour, we can see all the situational factors that have played into it. So ascribing exact balance or relative weight is hard. My professor at the London School of Economics, when I was doing my master's, always used to say context, 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 as to the sort of importance of situational factors. So I think it's really important that we bring those, much more to the fore. People don't act alone. They act generally as part of a team or a subculture. And those sort of subcultures are really important in how they drive people's behaviours. You can have two trading desks alongside each other, literally on the same trading floor, but they may have their own separate subcultures which would drive the behaviours of the teams in potentially different and divergent ways. I think I have my own example in my own life of my own behaviour as to how a situation can drive a different set of behaviours in what would seem to be a very similar situation. I'm a relatively rare person in the UK insofar as I support a football team, which in America would be a soccer team, and I also support a rugby team, and those are kind of two relatively different sports. If you go to football, it tends to be quite an aggressive atmosphere. It tends to be quite tribal, and I've often found that myself, when I'm in the crowd, when I'm in a football crowd, I get myself quite aggressive. You get involved with the chanting, you get involved with certain behaviours between different opposing sets of fans. And when I'm in the crowd for a rugby game, it's very different. You're mixed in with all the other fans from different teams, and it's a kind of very sociable situation. And it seems to me, very odd that I can be the same person watching two different sports, but behave differently given different situations. So, I think bringing in the situational attribute is very important.
Such a great example. That's actually a great segue to my next question, which is there something about the context of financial services and banking that influences people's behaviors and specifically their decision-making behaviors in a particular way?
There has been a fair bit of work on this, fair bit of research looking into it as to, do bankers behave better or worse than others? And what I can say from, having looked at it is the jury is out. So some research has shown that bankers appear to behave less well. They looked at this for a section of Swiss bankers, using some gamification. When reminded of their own role in banking, they appear to behave worse. But that hasn't been replicated. There's been further studies after that which didn't come up with the same results, which tended to show that bankers didn't actually necessarily behave worse. I think what is different about banking and finance is, though, that there is a very high prevalence in banking of opportunity, of conflicts of interests, of grey area situations, and that gives more opportunity for bankers to have a self-interpreted way of how they behave in the conflict situation. There's just basically much more opportunity to nudge one's own interests than other professional situations. So I think it's less that the bankers themselves behave necessarily worse or better, but actually there's much more opportunity and much more situations, which tends to therefore lead to more issues. I think you could actually move this also into the world of biology and neurobiology. In a situation where there are big rewards and uncertainty, that can impact dopamine and that could impact behavior. And there's also, a lot of work around things like elevated cortisol levels, elevated testosterone levels, which if they happen in conjunction with each other, can lead to more unethical decision-making. So in some ways, it's unsurprising that in certain situations, behaviours are driven by the environment of banking particularly. And I think a few other areas which are probably worth mentioning about banking which maybe play into this is one, probably the remoteness of bankers from the end people that they are dealing with sometimes. And when you can't see the impact on an individual, that gives a little bit of extra moral wriggle room. And something else would be the kind of framing a lot of the activity in banking necessarily around economic terms, which again can lead to ethics being seen to be a little bit further down the track. And a lot of that sort of situation played out in 2008 in the GFC, and in the complexity of the products, and in people not necessarily seeing the impact of their decisions on the people on Main Street, the GFC being the global financial crisis.
The pandemic obviously has created distance between all of us. And so I wonder whether you've seen, an impact on decision making, or whether you have thoughts on whether that's impacted decision making.
I think the first thing I would say is, what a hopefully once in a lifetime opportunity for us all to learn. If any of us in the industry were to try and plan such a massive natural experiment, we would plan and never get round to doing it. So the fact that, over a few weeks, there was a remarkable change in work patterns and how we worked and where we worked. And we've lived with the longer term consequences of that over an extended period of time. It is absolutely an area, I think, as an industry and as banks, that we should be furiously mining to learn from, because it is such a rich population of interesting sort of behavioural experiments, if you like. We actually did some work with a psychologist trying to look specifically at people's lived experience and staff's lived experience of the pandemic. And I think one very important thing that came through on the impact on decision making, or how people felt their experience had gone, is actually on the positive side, which I'm going to raise, insofar as people felt that because of the speed of change, that there was an agility and an empowerment that hadn't necessarily been seen before. And people actually took that as a positive. And then equally, there has been something that's come through on a sense of being more trusted, and with there being more agency for people in their day-to-day work. Because necessarily when people have been working more remotely from each other, you've tended to need to be judged more on, if you like, the outcomes of projects rather than sort of day-to-day micromanagement. So I think an interesting thing, and that came through strongly from our research, is that those things were seen as an absolute positive. And I think therefore it's very important that when we look at the impact of the pandemic, where people work, hybrid working, etc., we don't just focus on physical location. We don't just think about office, home office, isolation, etc. We actually look at what was it that changed in the way we did work, which people took as a positive and they would like to continue with, regardless of whether they're working in an office location or a home location. And those things around trust and empowerment and agency, I think, are really important. And across all the banks, and, if we look at operational losses or conduct issues, etc., it'd be important to look at those and say, well, what actually happened during the pandemic? Did they go up? Did they go down? Did they go sideways? Because maybe we'll learn something there about, the nature of not necessarily it being hyper-control, hyper-surveillance that impacts people's behaviour. Maybe there's something else around trust, agency, empowerment. And I think that's definitely an important lesson to learn. There are obviously a lot of other issues within the pandemic that definitely need to be taken into account, and people's living situations. For some people, it's much harder than others. For new joiners or junior staff at the start of their career, definitely much harder for people to sort of get a sense of, if you like, the corporate culture, harder to have the water cooler conversations. So there are definitely some downsides, but I definitely would also like to, raise the upsides, if you like, of behavioural change, which it's important for us to sort of weave through into the new world, the new ways of working.
We've kind of come to understand over the years that conduct is much more likely to be impacted positively by things like trust, empowerment, agency, by providing people positive motivation versus trying to police negative behaviors, right? So that's such a great point. I want to ask you one last question, which is especially important for us to hear from you. Tell us about a success story. What's worked for HSBC, and what would you recommend for other organizations that are trying to reinforce better decision making?
I think the first thing I'd say at the macro level is embrace the topic of organizational psychology, behavioral science, behavioral economics, and get on the journey. Try and ensure you have some sort of capability, SME capability, and build on that. But don't think it's something that somebody else does for you. You might need some expertise, but absolutely you want business engagement, you want business ownership, you want it to be something that everybody owns. You don't want it to be seen as something that a department does for you. So that's the sort of macro point. But if I was to look at one example, which I think is maybe a bit different, was that actually we did look at doing some work around the positive side of the behaviour curve. So rather than always looking at the negative side, rather than looking at the behavioural outliers from the downside, we did a piece of work, and again using a psychologist to sort of say, okay, do we have some exemplars out there who appear to be the people who have strong ethics, have a strong conduct profile, who people look up to, and what is it, if we unpeeled that, what is it in their DNA which is different, or what is it that we would like to build upon? And, we did quite a lot of deep dive interview work with those people to try and peel the onion. And what came through on that was very much that these people had a sense of agency over their own work. It wasn't work they were doing for other people, it was they had a sense of agency in what they were doing and a sense of trust in what they were doing, which they took as absolutely key. They had a common work and home persona. So they didn't put on, if you like, a different hat when they went to work. They had a strong sort of lineage through their personal life and the work life about what they saw as the right way to work and the right way to behave, which continued all the way through. They also had the ability to sort of push on through problems, to take ownership for problems and see them as things to sort of tackle with and not things to be defeated by. And I think there is a lot more depth in looking at the positive side of the behaviour curve, which is an industry we could go into and try to rebalance the fact that probably across the industry and all our risk departments and compliance departments, etc., we spend 99% of our resources and money looking for the 1% egregious outliers, and the opposite, only 1% of our resources covering the 99% of people. And I think rebalancing that and looking at the 99% and looking at the positive side of the behaviour curve would definitely give us all a lot more bang for our buck in the industry.
That's great, David. There are so many kind of common threads that you've woven. I think that the sense of agency is a good one. I want to just thank you so much for joining us today and for being part of this conversation. We were thrilled to learn from you.
Okay, well, thank you very much as well.
For more conversations like this, as well as publications and other resources related to banking culture reform, please visit our website at newyorkfed.org/governance and culture reform.